Hello, ladies and gentlemen, crypto deep divers. Welcome back to Wicked Crypto. Today, I'm going to talk about Bitcoin. Also, I will touch on S&P. Just in case you haven't installed the Brave browser, you can click the link below. It block out all the advertising. Also, you can earn basic attention token using the Brave browser. If you're interested, you can click the link below. That will help out my channel as well. Let's talk about Bitcoin. Before we get into that, make sure you subscribe to my channel. Also, share with your friends. Make sure you subscribe. You don't miss out the upcoming airdrop or token swap. Also, you can follow me on Twitter as well. And Silica, probably I talk about you have to do the token swap. The final day, I think, is around February 2020. And let's talk about Bitcoin quickly. So this is a BTC USD long position. Right now, it pumps all the way like crazy like that. And if you go to the commitment of trade for Bitcoin, you can see all the non-commercial one. They have long position, 1,425 big contract, which is one contract per 5 Bitcoin. And the short position is only around 2,000. So for commercial, which is a institutional investor, there's nothing. So this is mostly probably retail investor or probably some individual investor as well. So you can see the BTC USD long position has been pumping up like crazy. So I'm not surprised there will be a potential dump to liquidate all this long position. So and also right now we are kind of in a bearish momentum at this time. So maybe there will be upcoming dump as well. Not a financial advice. Use your due diligence. You decide what you do with your money. So the next stop we're going to talk about central bank, there's S&P because of the central bank liquidity. So it pumps the stock market probably like crazy, right? This year because of the because they stopped increasing the interest rate and all that. And right now, it looks like they're going to be pessimist next year for the S&P. So I don't know if you still remember 1 year ago, the stock market was tumbling probably before Christmas last year. It was like 20% drop and it was a big shock to a lot of individual investor. So it turned, people are afraid that we are going to the bear market and all that. And of course, with the easy money policy and the Fed, they don't want to increase interest rate, it pumps the market back. And right now, of course, the S&P is at all-time high, already surpassed the all-time high last year. And so basically, you can see that the Fed has been increasing the balance sheet like almost like October 16 and then October 30th. This is increasing the Fed balance sheet, and then they keep and then increasing. Of course, this is not. So it's increasing, and then you can see QE1 basically after the financial crisis. That is back in after the financial crisis 2009. They get QE1 and then QE2 and then QE3 and then QE4. They trying to remember they try to rewind or tightening policy back in 2008, back last year, 2018, and not 2008. And then the stock market drops. So then they are not going to tightening. They are going to keep easing. I don't know if you still remember last year they tried to tightening and then the stock market punched like 20%. So right now they're back to QE mode. So keep on printing, and then of course with the Ripple. Between the banks because the bank doesn't have enough cash. And please comment below if your bank come to you asking you if you're interested in open like a money market account. Like for example, Bank of America clients, they probably want you to open a Merrill Lynch account within the Bank of America network. They also do that in retail investor. Used to be Bank of America, they have a high minimum requirement, and if you don't have like tons of money, they won't even talk to you about open those Merrill Lynch or whatever account. Please comment below what do you think. Is the bank targeting retail investor that has maybe some kind of money in the bank? They want them to open a money market account. Let me comment below. And to me, it looks like the the bank do not have enough money. So even though you probably have like 50 or 70,000 or whatever, or even less, they probably want you to open an account with them or something like that. So comment below. I would love to hear from you. And also, oops. So this is the global central bank cutting the interest rate. You can see, cutting rate. So of course, after the financial crisis, they cut the interest rate almost to zero, and of course, because of the zero interest rate policy, if you're the safer, you're going to lose out for the decade, right? If you don't put your money into real estate or stock market, you're going to lose out for sure, unfortunately. So right now they are having the interest rate is cutting again. So it is like insane. So they want to keep on easing because like last year they tried to tightening and see what happened to the stock market. It has a big drop. And this is the forecast from last year from the big brokerage firm. You can see of course, right now S&P trading at all-time high around 3,150, and I think last year, let's see, so basically already above the all-time high. So Bank of America. So saying the forecast will be 2,900. Bank of Montreal, the S&P will be 3,150. And then Barclays, 3,000. Citigroup, 3,001. Credit Suisse, 3,350. Deutsche Bank, 3,250. Goldman Sachs is 3,000. HSBC, 3,150. Morgan Stanley, 2,2750. RBC, Royal Bank of Canada, 2009. And then UBS is 3,002. Wells Fargo, around 3,000, 779. So this is like the forecast for this year. So this is a year ago. So which is almost, So they are right on their target. So what happened to next year? So they are very pessimistic next year. They're talking about the S&P probably will be sideways or no growth or zero growth in the coming year. They expect S&P just to do absolutely nothing in the coming year. That's what they are predicting for the next year S&P. Because of the next year is the presidential election cycle. And I don't know if they still continue the printing press and all that. I mean, if the Fed still keep on the printing press mode, then it may pump even higher. If they not doing that, then of course, there's no more musical chair, no more party. So you can see this is the let's see, not this one. So you can see the S&P earnings and buyback. You can see the buyback has been skyrocketing from 2016 to 2018, and yet the earnings is below the buyback. This is crazy. And then you remember last time the recession for 2000 because of the dot-com bubble, right? 2000 there's a recession, and then you have a housing crisis in 2008. And before that, there's a huge net buyback as well, pump the stock market. Here we have a huge pump of the buyback. So basically, if you buy back your own stock, you're going to pump the market basically, right? Instead of putting the money into the research and development to create the next big thing, they are just keep buying back their own stock and pumping the market. So if you're the founder or CEO, you probably make a lot of money, but this is not sustainable. And because of the easy money policy, those corporation, they basically buy back their own stock using, of course, using the bonds or whatever, and to pump the market. Of course, they're not going to use their own money. They're going to borrow the money. So this is like a cycle, basically. So next year they talk about the Wall Street talk about they are not very bullish on the stock market. They said Wall Street strategists are least bullish on the stock market in 15 years. So probably will be less than 5% return or 0% in next year. And this is pretty interesting. We'll see. They're talking about the S&P will be zero growth from this time, probably no growth, or it will be probably lower than this year. Next year will be lower than this year. So this is hard to tell at this time because there's a lot of factor going on right now. So you have a trade war, and then you have a lot of presidential elections. There's a lot of variables right now, so we don't know. And I mean, it is prudent to say that we don't know it will be go lower or whatever. But then if they don't stop the easing policy, then they keep on have easy money policy, then they probably will keep pumping until the election. And another thing is the ECB, Bank of Japan, the Fed, of course, make tons of purchase and just keep on QE and never ending story. So in 2020, they keep on still pumping the market. 2019, 2020, if they keep on doing that, I'm not surprised the stock market will keep pumping. So, and this also happened, of course, after the financial crisis. All the central bankers, all the central banks are printing money like there's no tomorrow. Just like Bank of Japan, of course, Bank of China doing the same thing. The European also doing the same thing. So so we don't know. Everything is like fake, right? Become like when you're printing so much money. So maybe the only thing is real, probably you have to hold the asset. If you have a house or if you have like commodity, gold or silver, or something that you're going to use to generate income instead of holding all this paper money. So you never know. So let me know what you think about this. What's your prediction for S&P next year? Do you think it's going to be going up or going down, or is going to be sideways? So I think it's really depending on the policy from the central bankers. If they want to keep on easing, it may potentially pump the market even higher. Remember last year before Christmas, when they tried to tightening, the stock market dropped 20%, and then the central bankers freak out. They stop increasing the interest rate. They keep on the easing policy. So the musical chair keep going. So we'll see how it goes. So yeah, if the stock market going down, I think they're going to keep on printing and support the market. That's how I felt at this time until they cannot do it anymore. And maybe I could be wrong. It's not a financial advice. Let me know what you think about the direction of S&P for next year. And let me know what you think about Bitcoin. So this is a BTC USD long position. So there's so many long position. I'm just suspecting they're going to dump the price to liquidate all this long position. So I'm not very bullish in short term for Bitcoin right now. Please comment below what do you think about the direction of Bitcoin as well. I would love to hear from you. If you find this video helpful, smash the like button, subscribe to my channel. Also share with your friends. Make sure you subscribe so you don't miss out the upcoming airdrop or token swap. Also, you can follow me on Twitter as well. And make sure you comment below. I would love to hear from you. Please also comment what kind of videos would you like to see, like what kind of topics would you like to see. Please comment below. I would love to hear from you. And remember, crypto deep divers, we the people take control of our money. Stay wise, stay safe, peace. I'm not a financial advisor. Investing in cryptocurrency or commodity can have inherent risk. Please use your due diligence.